Hackers, gamers, and traders, welcome to JBeanTV, the prediction arena, where foresight meets fire. Let's dive in.
Welcome back, predictors. It's challenge number 11. A new week, a clean slate, and 3 nights to dial in your edge before Thursday's finale showdown. That's right. We predict Monday, Tuesday, and Wednesday, and then everything we've learned plays out under the lights on Thursday night. Each call you make builds your streak, your score, and your JBean identity, because consistency here means credibility everywhere. Tonight, we're kicking off with a pulse check from the wizard himself, Doug Kyle. He'll walk us through the current Bitcoin rhythm, where the volume barriers are holding, how sentiment is shifting, and what clues his indicators are giving us about the next move. Then Doug's diving into tonight's training segment, showing us how to read between the candles using one or more of his custom indicators, the same ones that help the pros find the truth behind each move. So get your charts open, prediction keys ready, and your minds locked in, because challenge number 11, night number 1, starts right now.
Hey, Big Kaz.
Hey, Doug, how are you?
Oh, I'm doing great, man. What a day, what a week we had last week. And this week is kind of channeling out, settling down. So it's going to be interesting to see where everything goes as the week goes on. So we're going to dive into our indicators a little bit tonight. We have some questions about supply zones and demand zones that I'm going to answer as we head into this. And it really ties into some of the main indicators that I've given to you guys this week. And I'm looking forward to kind of dialing down and showing you what you really need to be paying attention to and what's most important. So let's dive in, Bitcaz, maybe with the first question, or because we haven't done any predictions yet. Tomorrow night we'll kind of dive in and see where everybody thinks we're going. But tonight we're going to kind of dial down into some questions. So Bitcaz, let's do that, unless you have something else we need to cover real quick.
I don't have anything else to cover. Nope. Do we have questions from the participants?
We do. I got 4 of them that we're going to answer tonight, all about supply zones and demand zones.
Oh, back to the basics, Doug. I love it.
Yeah, and I'm going to dial it down, dial it in, I guess, just a little bit more, because what I'm finding, I'm developing a couple of new things for everybody, but one of the things that I'm finding that no matter what indicator I'm cleaning up or what indicator I'm working with, one of the key tools is the interbar volume that you guys got today. The other is the Price Discovery Navigator that you got today. But the key is knowing where that volume is. And this is going to be true on every indicator that we use. So when we talk about volume, the real question is where is that volume? And then how do I interpret that? And this is going to be important for your AIs also, that we build a framework for your AIs, because I was working with an AI all day today while I was editing films also. So the key for the AIs is they don't understand. And I guess this is a lot like people, because people don't understand either. Where that volume showed up is extremely important, because it helps determine what kind of volume it is, whether it's exhaustion volume, or whether it's maybe accumulation volume, or volume coming in to continue a push either up or continue a push down. And if you understand that, it puts you way ahead in terms of being able to interpret the indicators correctly, because all indicators have some level of interpretation. even though I work very hard at taking the interpretation out, as we'll look at tonight. But still, at the end of the day, it takes some interpretation to apply, I think, what would be more refined knowledge to the market and how the market's moving. So one of the first question that I have is, what is the difference between a supply zone and a demand zone? And how do they help me anticipate where price will bounce or potentially reverse? So let me bring up the volume zone indicator itself, and we can talk about this. I got it set on a 1 hour so we can see a bunch of zones. Okay, so when we're looking at zones, supply zone means the S up here, supply zones, mean that there's a lot of supply. And a demand zone means there's a lot of demand. Okay, so when you think about supply, you can think about, the housing market. And this is an example I use a lot because it's one that everybody can relate to. If there's a lot of homes for sale on the market, what usually happens? Give me a 1 if the market goes up, give me a 2 if the market goes down. There's a lot of homes on the market. Tell me if the market goes up or if the market goes down. Yeah, it goes down because there's a lot of supply, right? And so the buyers can negotiate better contracts or better prices on their homes because there's a lot of supply. So when we have a supply zone, it means there's a lot of sellers that were there, and those sellers came in and created a barrier, a supply zone. When the market goes down and there's they're finding barriers or swing points below, often we see a lot of buyers come in. Those buyers create what is called a demand zone. When you see the demand zones and the supply zones, not all, and this is one of the questions here, the question is how do I decide which star rating zone to actually trade or base my predictions on? And what they're talking about is this little star here at the end of the zone. You see a 1 star, you got a 3 star here, a 1 star down here, 2 star here, 2 star, 1 star, 1 star. When you think about the stars, they are really showing which ones had the highest volume in those zones. So yeah, when you look at it, if you see a 3 star, it's a very high volume zone. See a 1 star, it's a zone, but it's a little weaker. Okay, it didn't have a lot of volume in it. So those are the way that you determine. Now, I would still pay attention to even 1 star zones because they are more volume than in other places. Okay, it's not that they're not a demand or supply zone. They just don't have the same amount of volume in them. And so they're still very valid. And especially if you identify them around, a bottom or a swing point, you want to pay attention to them. Okay. So that is the star system on those. And then there's a question that talks about, and I've got it set up this way, where if a zone is broken, what does that mean? Okay, so I'm going to look at this demand zone here. This demand zone happened during this candle. The market went up and it broke it. Basically, that demand zone is done. Okay. Does it serve a purpose in the future? Somewhat, because the barriers, the lows of an area that got broken. This was support at the bottom here, and I'll put a line on it here. This was support right here. This was supply, or this is a demand zone. This is the support area of that demand zone. We broke that, okay? We came back to that This being a two-star demand, I think is important because there was a lot of price action here. It's different than a one star or a no star, okay, or no demand zone at all, right? There was a lot of price action here, and it tells you that there was buyers here and those buyers lost, and that when we get back up to the bottom of this is going to be an important target. If I look at this wick low here, we come right to it here, right? So this does become important because it identifies the amount of volume. When we get back above it, if I were to draw a box here, this is the zone here, right? When we come back to that exactly, we can see it's still an area that traders remember, okay? We get back above it. We've already created another demand zone. I'll talk about this one here in a second. But, to me, it's not as valid because it's already been broken. It's just what we should see if the market's going to honor this kind of range. We should see a demand zone being built or somewhere around this area that the market is going to honor in the current time. And that's exactly what we see here. Okay. And it's a very strong one. Here we have an overlapping supply zone. We have this major demand zone that's created, and then we have this small overlapping supply zone. This I would not pay attention to. Okay. Because for this to not be valid, we really have to get below it and close. So sometimes it just is looking at the volume of a candle. And in fact, in some ways, the fact that it closed above it actually solidifies the demand zone that much more. So there was enough volume in this little down candle that created a supply zone, couldn't go anywhere, which again validates the demand zone that much more. Get above it, we pull back to the demand zone, we take off. So that's three of the four questions. The last question is, and I just kind of covered it there a little bit, is what if there's multiple zones together, stacked together? How should I interpret that? So it depends on what we're looking at. If we're looking at live zones that have not been broken, these are very important barriers, okay? If we're looking at these past zones that have been broken, then not as important. Now, how do I tell a zone that's been broken versus a zone that hasn't been broken? And you can see this demand zone here is this box, okay? It's this bigger area. It's not just this little point that I put here. In fact, I don't want to confuse everybody and show that incorrectly. That really is the zone right there. It's that box, okay? So the other way I drew it might have been a little bit confusing.
25, 26,
Okay,
25.
so when we see the pass zone, how do I know that they are old zones or broken zones? In the settings, when you look down, the color code, a demand broken zone is this light color. Now, if you want something that is a little bit more out there so that you could really see that, you could make, the demand zones white. So now that's a broken demand zone, and you could make the broken supply zones, you could, make that maybe a brown, okay? And so then it's very clear that these are broken zones. And I would use these to educate yourself on how the zones worked in the past. I'd go back and study these. I'd go back and study the 1 stars and the 2 stars and how they're stacked together here, like what was asked, right? And we could see that it held for a long time, but when it broke, it was over. We got a new one here. It broke. It was over. So, and this is a 2-star, right? I would go back and study these and see how they apply and how they work, so that you can better use them in the current time. Now, if you don't want to see all of this and it's a mess, it gets too busy for you, you go back here and you simply turn these off. Okay. Now, all I see is the current zones. And if you remember, I changed this to a brown, which is telling me that there's always already been pressure above it. But to me, we haven't closed above that. So this is still a very important zone. Oh, no, excuse me. No, 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 no. This is the brown. So be careful with your colors so that you don't get them too close. I'll make this a red now. And there we go. So now I can clearly see that that has not been broken. Okay. So those are the demand and supply zones. Those are how they work. Okay, so we've looked at the zones, and I think we're kind of clear on those, but I'm going to dial down here just a little bit. I'm going to go to the interbar volume, and some of the like the Discovery Navigator and one of the very advanced tools that I'm developing also that is, I think, the tool of all tools is the one that I'm been developing for some time. It's a concept I've had for a long time, and I think I gave it this portion of this indicator to help it, and it came back and said, Doug, this is pure gold. And it is. This is the difference between, and I talked about this I think last week. This is the difference between an indicator and then an indicator with intent. Okay? So when I don't care what indicator we're looking at, we have to understand what price action is doing and where is it doing it at. Uh, one of the things that we look at is that, and you'll have this indicator, and it shows contracts. And I talked about this last week where I showed you the futures contracts. And the way that all of those indicators work is they look at contracts in a candle and or at a certain time, right? And that's it. They know that on this candle or if I go to a 6-hour candle, that during a certain time, uh a lot of volume was going on and contracts were being bought. But what they don't pay attention to is the intent behind the contracts. So, and what I mean by that, what you're looking for in volume is any block of traders getting trapped. This is a lot of volume right here at the bottom of this candle. These are buyers, and we know they're buyers because the wick was low and the market came up, and the volume is not in the top of the candle. That would be sellers driving it down. This is buyers driving this wick back up. Okay. If the market continued down and closed a candle below this, okay, so if we had a candle, and I'll do this here, and this is important for your predictions too, guys. This is really important stuff to understand where the volume is, and I'm going to black out all of this, okay, as if it didn't happen. If the next candle after this wasn't this green candle, it was a red candle, and it did that, and it closed down, we would call these buyers trapped. Okay, they tried to drive it up. They put in buy orders or buy contracts, or they bought a Bitcoin, or they put in a long position in a futures contract, whatever they did, however, we're tracking this information. If it closed below here, these guys are trapped. They are in a position where if this goes deep enough, if it goes right here, they might be okay. They're still having to, if they're in futures contracts, they're having to cover those contracts. But maybe they're not stopped out yet. But if they go any deeper, they're going to be stopped out. People that are trading leverage are going to be stopped out. And that creates a trapped situation. Okay. So when we're looking at our indicators, and as you guys become more and more sophisticated, the thing that you want to know is where is this volume? It's an up green candle, but where did the volume take place? It happened in the top. All of these, if these were buyers and sellers, if it's mixed, right? Whatever buyers are here, they're trapped. If it's all sellers coming in and driving it back down a little bit, then these guys are good on the down. So, but you want to know this. You want to know where this is, because then whatever the indicator you're looking at has more value or more intent for you, because you know exactly where the players are showing up. Okay. So as we move forward in indicators, and you guys have this indicator now, you really need to look at this. And you can tell. Look at this one. This was all down, had some volume in the bottom, and we could not close back above that volume. You want to see you want to see the market. If this buy volume in the bottom of this candle, which it is going to go up, you're going to want to see it close up here. But what did we see? We saw the same volume come back in at the exact same price and drive it down. So that should tell you two things, guys. One, our next day, our next candle, whatever we're predicting, if we see this kind of stuff, is going to go down. The other thing it should tell you is if I'm going to pick a high for the day or for the candle, these are my barriers for my high. Now, it can break it, okay, but for the most part, if this has any real weight, if I see other things like supply zones or demand zones around these things, then these become very, very targetable. Look at this. This one closed down. Look at the wick. It went to the third highest volume on the low. Didn't go past that. We closed above it. Okay. Now this one comes to this barrier, right? And not all of these are created equal, granted. Okay, but the ones that are higher volumes, you can really target, areas. You look at where the market has been, where the market has done basically a battle, where there's been a lot of volume that has gone into something, is where that volume is going to play out again. Okay. If I look across these here and I just bring this across, doesn't surprise me whatsoever. Okay. This one, even if you're targeting this as the highest volume of all of this, if you're targeting this for any pullback of this up move, you're predicting an up move, then you're really going to be close in that prediction. Okay. So the demand zones, the supply zones, the volume within the candles, all of these begin to tell you the story of what you need to be looking at and what you need to be reading. Okay. The next thing that you guys have as of today is the price discovery, right? I'm going to set this on daily now. If I go to settings, I'm going to take this to 0 here for a second. I'll explain this to you here as we go through it. So I'm on the current candle, and this is giving me some prediction ranges. Well, I can see a lot of volume in the top of this buy candle, right? This last up, right? I can see a lot of volume here. You know, I have to pick whether I'm going to choose this or this maybe as my barrier for tomorrow. Do I think it's going to go down? If I think it's going to go down, then I got to begin to target other things. Now, let me show you how this indicator has worked in the past, okay? There's multiple ranges here, and you can use them in combination with each other. These are the two largest ranges. If the market were to go up, this is a pretty large range for right now, and this is calibrating based on current market movement, okay? So, you know, historically people say, well, Bitcoin moves 2.5, 2.6% or whatever they think it moves. This does not do that. This looks back at current volume, current market, and it calibrates itself for a range of movement based on current market. Okay, and it goes back somewhat, you know, a number of candles to figure that out, but it's pretty accurate in terms of trying to give you a framework on a range. And there's a couple of ranges in here, and we're going to look at this. We'll go through all of these settings, and there's just a lot here to go through in detail. But the thing that I want to show you is how you use this tool is to be able to walk backwards in time and see how the ranges work. And when I was talking about, if I'm using up as my, I believe up is the direction, I don't have to just start at any one of these things. Wherever the market opened, okay, on the candle, then I'm going to predict and use these as my different ranges, and it gives you the information here on those ranges. Okay, so let's walk backwards. Let's go back a candle. So this allows the indicator to go back a candle. Okay, the market opened here. Okay, and you can change these colors so they're a little easier for you to separate. So if I wanted to separate my down range, my small up range, okay, let's change our small up range to a green and say okay. So now I have, this is all up and this is all down. But I can use them in combination with each other. You can see this went down to the middle line exactly, okay, and came up to my top range almost exactly. This candle's high was 111750. This top is at 111715. Okay, so your job is to try to identify the barriers around these kind of ranges and then see how you can put that together using the barriers, using the zones, and using this as a range tool to help you figure that out. Let's go back another candle. Let me go back one more. It opened up here, okay? It went to the top here. This candle's top high was 109450. This top here is at 110231. So very, very close, okay? The down almost came to here, but if you look, then the highest volume is the green, and look at where it hit. So if you said, okay, some of it's going to come down, I believe the overall is up. We're trading above the volume. We opened above this volume. Okay, we wicked below. Okay, I'll target this within this range. Okay, or I target this and I'm going to be very close. That's within this whole volume. Highest volume is green, second highest volume is blue, and you can change these colors to anything you want. Okay, but it gives me a very good target. And I said, okay, it's going to be up. Well, really, the only next volume I have is this here. Well, look at where it came to. And there's my target. Okay. Not always going to be perfect, but it's going to give you a framework to work with. And everybody will interpret this a little bit different. So our predictions will be different. They'll be within ranges of each other, but they'll probably be different, or some people may go totally different, right? Let's go 3 candles back. Here I closed, right? I didn't go down hardly at all because all the volume is in the bottom of this candle, okay? And I didn't have anything to target here. I may have to dial down to a shorter time frame to see something in here because this is my range. So I don't have anything here, and I always talk about that if you have a high volume area, it acts like the volume profile indicator I give you guys, where you have the control point, right? Yeah, and then you have the targets above and below your control point. Those act like magnets. So if you're close enough, think of 2 magnets. If they're far apart, they don't pull on each other. But if you get close to one, okay, then it pulls it, right? It pulls it up, and then look at this response. It's very similar to this response. A rejection here, a rejection here, okay? So we're far enough away from this that it's not going to act like a magnet. So we're not going to get up here probably unless something fundamentally happens. So I've got to either use my range, just pick a range, or I've got to try to dial down and find something different in these candles that might be targeting, or use my volume profile tool to find that. Okay. But you guys can see how this thing does, and it's very, very good. Now we'll get these big monster moves out of nowhere and nothing works. All right. We just have to wait for the market to settle down, and then our tools come back into, making sense, and tools begin to work because they work with things that are standard in the market. Um, but I think this is clear to follow, and you're always following where volume took place. Not that, like everybody else is doing, they're putting on an indicator like better volume, which is a great indicator, right? I love better volume, but this doesn't tell you where that volume took place. Okay, it just tells you that it was a high volume. Very important. Okay, and the type of volume it was very important, but it's equally, if not way more important, to know where that volume took place. Okay. All right. That is the lesson for tonight. I'm going to stop sharing. Great questions. I appreciate it, guys. And Vic Kaz, I am going to direct back towards you.
Awesome. That was amazing. Thank you so much. I like getting back to the basics like that. That was very helpful. Appreciate that. There is a question. I don't know if you saw this, but when you're looking at those candles, at the volume in the candles,
Yes.
when there's nothing, no volume there, what does that indicate when it's empty? When the candle has the
Let me share my screen. And and was that an icy question?
no.
I gotta share my screen because I gotta clear something up for Icy. Icy asked me a question, and I just kind of casually answered it, but I answered it wrong. Okay. Surprising, I know, but it was wrong. Okay, so Icy asked me how I got these candles hollow. And he asked me if I used a hollow candle. I do not. If you use a hollow candle, you'll get where there is no volume in it, okay? Because that hollow candle blocks it. You can see this kind of filled area on this hollow candle in the indicator. It's the wrong way to do it. The way to do this is use a standard candle, okay? And when you use a standard candle, let's double click on a candle. Normally, I turn the bodies off, okay? Just either you can turn them off or you can color them way down. You can take the opacity and take it way down where it doesn't show. And then you have your borders and your wicks, okay? So turn it off or take it way down. And then you could have your, your colors in here if you have them way down. And then if you ever, and this indicator, I think I built it where it kind of turns it off automatically, should be. But for most cases, the answer is you got to turn it off. Once that is off, you shouldn't see other than maybe a little candle like this, and you can see that it had no volume. But for the most part, there's volume in every candle.
Okay, so one of your colors must be black.
One of my colors, where do you see black at?
Okay, so what I'm asking, what the question is, what does this signify, this area here that's black?
That area is very low volume.
Low volume. Okay, that's what I thought. It
Yeah.
was a low, so it was under the
Well,
threshold.
no,
of-
what I'm, and I could build this so it show you all the volume in here, low volume to high volume, but it gets really messy,
Sure.
right? So the only thing that the way I built this, the only thing that I'm concerned about, oops, I gotta get on the right indicator and then I can show it, is the top 5 volumes
Okay,
in the
that
candle.
makes sense.
And I have green set as the highest. Okay. Now I can click on this. If I only want to see green, where green happened, I can do this. Okay. And I can see where the highest volume took place and say, okay, now I only see where the highest volume in that candle took place. Or if I want to see the top 2 levels, right? If I want to see the highest and the second highest, right? I can do this. Okay, now I have the highest and the second highest, and sometimes I can see them together, which is really cool, or they're split. What I don't want to see is a situation where I have, see if I can find one. Don't see one right. Yeah, here. I don't want to see them split like this. I don't want to see the highest volume in the bottom and the second highest volume in the top. Really, that creates a very tight, and we can see it range here. Again, the highest volume here and the not in the bottom. It's still in. This is significant that we're going to go down, right? But I don't want to have a big candle where they're split, and that doesn't happen very often. You see them split like this, that's okay. They're both in the bottom of the candle, right? What I don't want to see is like green down here and blue up here. I don't want to see that kind of blue down the bottom and green at the top. You don't want to see them split. But yeah, you can track the 2 highest volumes in this. Very, very, very powerful indicator, guys. Took a long time. Well, here we have it, right? Blue in the bottom, green in the top. On the biggest candle. Not surprising, right? Tremendous amount of sales volume came in here, and a tremendous amount of buy volume came in here. The highest volume was up here. We still haven't closed above this. This is still in play, when the market gets back up to it, if we ever get back up to it, that's still in play. Okay. We've already played off of this a number of times and closed below it, coming back to that same range. Decisions were made here and they were made here to get below it. Now, if we can close back above this, even though it's kind of been broken, I still think this was a significant barrier and a significant decision to drive this back up. I always want to honor that and say, okay, at least I got to get back above it, which I'm not doing yet. I'm closing right at the top of it. Look at that wick high. You see, it's so transparent once you learn to read these things that you take the biggest things that are happening, the highest volumes that are happening, and then you look at how they apply to the current market. Because this took a lot of people, a lot of traders to make this happen in this candle. Big time. So, okay.
So let me ask one more question on that one. The green at the top, that was the highest volume. You've got the blue, which is the second from the highest volume. Let's say hypothetically, you had 2 million in buys and sells happening in the green area, and you also had 2 million in buys and sells in the blue area. Would both of them be green?
You won't have that. But in theory, this whole thing would probably be green. I don't know. I've never seen that.
But
because of the way it's tracking it, it's not the way I built it, it's not possible.
okay. The reason I asked the question is because I didn't want the audience to be confused about, oh, because when we're using that example, it's very easy for your mind to go, oh, okay, so if it's sell pressure, it's green, and when it's buy pressure, it's blue.
No,
it's not the case. So
No,
that's why I wanted to ask the question in the way I did, so that maybe the audience would.
So what, and I'll ask this to everybody. What makes it buy pressure and what makes it sell pressure? Does anybody want to take a wild guess?
Well, yeah, anybody else in the audience. I mean, it's because it's going up at the bottom, so those are buyers coming in, right?
It's where it takes place, right?
Yeah.
So this took place at the top, and what happened after it? It went down. This took place in the bottom, and how did it get here? It had to go back up.
Yeah.
So where it's being represented in the candle dictates what type of volume it is, buy or sell volume. Even if it's a green candle and the volume's in the top, that means it's sell volume because the last move was down. It's down pressure. You never, and it happens. You see it in the very top here. It held, it went up a little bit further, right? We don't have a big wick. Here we have a big wick and it's in the wick, okay? It's in the wick here, it goes up. Where it takes place, it's in the body here, and we went down, we had an up, but no volume here, none. The two highest are up here. Well, look at where we went to, almost to the bottom of the highest blue, and then we came back down. Okay, we held it down. Look at this one, right to it, right? We opened up, volume came in at the bottom, we came right to it. It's not magic. It's just that the market, and especially, and this is an important thing to note, as the market became more and more automated, 20 years ago when I was trading Forex, not a whole lot of automation. We had institutional traders that had some automation, and we had some quants. They were called quants that came out, mathematical geniuses that build trading tools or trading systems. But today, we have tons of trading systems. We have companies that have systems where people follow each other's trades. We have companies like Digibot that builds automated systems and insights, automated systems. We have automated systems everywhere. So the automated systems are using this stuff more today than they were 20 years ago. and they become that much more important or that much more valid because of that. Okay. Whew. That's it.
Love it. Love it. Well, what an incredible start to challenge number 11. Doug just dropped pure gold tonight, walking us through supply and demand zones and showing exactly how those invisible battle lines reveal where volume really sits inside each candle. That alone is game changing for predictors who want to stop guessing and start reading intention in every move. And then, as if that wasn't enough, he surprised us with a brand new indicator. We got a first look at how it works, how it reads its signals, and how it layers perfectly with the other tools we've been learning in previous challenges. This is what JBeanTV is all about: skill, insights, and the power to see the most what most traders miss. So take what you learned tonight, review your charts, and get ready to lock in your next predictions tomorrow. Remember, every accurate call builds your streak, your stats, and your legacy on the JBean leaderboard. We'll see you back here for night number 2 of challenge number 11, where we'll keep turning knowledge into precision and precision into power. Until then, stay sharp, stay curious, and keep predicting like a pro. Good night from all of us here at JBeanTV.
That's a wrap from JBeanTV and the Prediction Arena. Keep predicting, keep climbing, and I'll see you next time.
Your OmniBean NFT gives you access to Wizard Doug's live sessions, real strategies, real results. Don't just watch the show, learn from it. Get your pass at prediction-nfts.jbeantv.com.